I think we've got about 15 minutes left. So one other topic we're keen to cover with you, again, which is quite a unique kind of thing you're doing, is investing in Turkey, a place that...
Yeah, let's keep it controversial.
Yeah, a place that has some, some interesting businesses, and you can maybe tell us about that, but it sort of has this big macro overhang of high inflation, high interest rates.
Yeah.
We'll
call them unconventional economic policy.
There you go. Yeah. So what attracts you to Turkey in the first place? And do those factors play into how you analyze businesses over there at all? Or are you still very sort of focused on the micro?
Yeah, that's a great question. So Turkey is great hunting grounds for a value investor, but you need to be really familiar with what you're doing because there's so many unique aspects when you get into these developing markets. So my wife is Turkish. I've spent a lot of my adult life in Turkey. And about, let's say 7-8 years ago, through Guy Spears ValueX conference in Switzerland, I was introduced to Mesut Eliotolu, who's like the number one Turkish equity analyst globally. He was the head of ABN AMRO's, he was the investment officer for ABN AMRO, Turkey. He has been focused on the same 400 equities for a successful 30-year career. And 200 of them you don't touch anyway. So there's like 200 firms that he's been evaluating. And it's shocking the knowledge that he has. I mean, he knows the C-suites and their predecessors and their predecessor's predecessor. And I really get the deep sense when he walks in the room, people are intimidated by Mesut because he knows the company better than the executives.
The new CEO.
That said, as you mentioned, they're in a sort of it's a controversial place in the world. Erdogan is a very controversial figure, political leader. And these unconventional policies that I joked about is that they're going through like massive inflation. There's currency depreciation. And when inflation happens in Turkey, when inflation happens anywhere in the world, economic 101 is that you raise interest rates, you lower the money supply, and then there's less demands for a given good, and it could slow your inflation. Hopefully it does. In Turkey, when there's high inflation, they just lower interest rates, and it creates a positive feedback loop, which is horrible for the economy.
Wow.
So, or I guess maybe you'd call it a negative feedback loop, but it's inflationary.
Yeah.
So they're putting inflationary policy on top of an already inflationary environment. And guess what? It didn't work. So, 15 years ago, it was about 1.3 lira for a dollar. And today it's about 15 lira for a dollar. So you can imagine a scenario where like your currency just depreciates 90%. And so these are all factors. We are well aware that we don't hedge the currency. We are well aware that the currency is a depreciating asset, and there's unconventional economic policies that are pushing it in that direction. So we are focused so much on the microeconomic factors. So if you're in that scenario, we're looking at businesses that have like a global footprint. So maybe they're earning euros in revenue. They're earning their revenue's coming in dollars. Their revenue's coming in euros, but their expenses are in lira. So their costs are going down, and their revenue is stable. Also, we're looking at really solid global companies that are trading on the Borsa exchange. So as the lira falls, they just naturally become cheaper. We are spending dollars to make these purchases. So if the lira gets cut in half, the companies we were looking to buy just get cut in half. Further, foreign investors leave, so there's almost a decline. If they just sell the index, there might be a decline in the general price. So in Turkey, we are finding opportunities where you can truly capture like PEs of 1. You can find things trading for 3 times earnings, 4 times earnings. And you need to be comfortable with volatility because the prices are not efficient. They're inefficient. So information doesn't flow as quickly as they would in a developed market. So, and that's why these opportunities exist. So Mesut and I launched a separate fund from Peterson a few years ago called Talus. And you can go to Talus and we lay out all the companies we own, and they're just spectacular. So sometimes it's hard to get in. You would need a special tax ID and things like that. But you're able to purchase a few of the bigger ones if you like it. They're exceptional opportunities over there.
Yeah. Is there a concern that, I mean, these businesses are really cheap on a valuation basis. Is there a concern, or is there a catalyst that you look for there to be, for the market to kind of become more efficient? Because obviously, looking at the US market, for example, you might see an inefficiency, and you're hoping that over the next few years that gap is kind of closed. Is that something that you treat differently in Turkey? Is it the same? Like, how do you kind of navigate that?
That's a wonderful question. So, we do sort of need catalysts. It's a different type of investing when you're in emerging markets. So, because the prices could be wrong for a long time, and you have to sit there and wait, and it impacts your annualized IRR while you're waiting. Mm-hmm. I will share with you a situation in the current environment. We were just out talking with Anadolu Hayat, which is one of the largest insurers, and they're moving into all these pensions and asset management businesses. It's a great company. The chairman, we met with the chair and C-suite. The chairman used to be the CEO of Ishbank. And to put it in perspective, it's sort of like you're sort of just talking to Jamie Dimon. And we're sitting there, we bring a tour over. So we did a tour in January, and there's about 10 of us just asking him questions, explaining all sorts of things. And we get to hear this from multiple individuals, but coming from him, it's quite interesting, where he says, basically, he explained to us that, and we already knew this a little bit, but he confirmed this. There's an election scheduled for next year. Now, Erdogan, we're not sure what's going to happen. Erdogan's had a way of maintaining his power, but they've put in place so many of these unorthodox policies and seen them fail, that even the current administration knows that it was a mistake. They just can't go back on it until the election, because they will lose their base. So what we were told is that no matter who wins the election in March, we will move to conventional economic policy. So we will start to now raise interest rates to counteract inflation. We will treat the economy as it should be treated, rather than sort of experimenting and shooting from the hip. So the catalyst for a lot of these opportunities is going to come next March. Now, the election could be pulled early. They could just announce that they're going to make an election, and then the incumbent has the advantage. So maybe they announce that they're going to do an election in August, or it could be postponed a little bit. But the election will occur, and once that election happens, many of our holdings could triple overnight, because they're just so mispriced. If you get a good stable business selling for 3 or 4 times earnings, it can just readjust and sell for 8 or 9. And these are growing companies also.
That's crazy. And we've just got the 5% battery signal, so we'd better get through my last question, which is completely unrelated to Turkey, but I know you're a big Daily Journal man. There's been a lot of speculation around why Munger might have cut his barber stake in half. Do you have any final thoughts on why that might have happened?
I think it's I wouldn't put anything at 100% or 0%. Sure. But I think it's almost unequivocal that this was a tax loss harvest, and I think it's amazing how many people speculate. It was what he did is he just did the opposite of how most people think about tax loss harvesting. So he instead of selling, and then in the U.S. we're required to be out of the security for 30 days to avoid these wash sale rules. Mm-hmm. Instead of taking that approach, he actually just bought first, waited till the next quarter. So he waited however many days, and then he sold the original position. And it's almost dollar for dollar. He almost doubled it and then cut it in half. Yeah. Now, I don't think he changed his opinion. I think what Munger would be a probabilistic thinker, and so he logically understood that for him to be out of the stock would put him at great risk of missing a big upside. And so he would rather be doubly exposed to that potential. There's asymmetry in where the shares go from here. There's much greater potential for upside moves than downside moves. So he was more comfortable buying in twice and then selling later to capture his tax loss.
Yep.
And I worked out that he probably saved in present value terms about $4 million for Daily Journal,
Wow.
which doesn't seem like much, but you have to imagine this only has a $35 million in revenue.
Yeah.
And so if you, $4 million is tangible.
Yeah. Because he sold the exact amount of shares, I think, that he bought in the first and third quarter or whatever it was, the first two purchases that he made. So yeah, it's just interesting to see that he did it in reverse, and he used margin as well, right? He took a little bit of margin on, and then
margin at like 0.75%.
Nothing.
It was 50 bips over the risk-free rate.
Yeah, and I think a lot of people at first were wondering what is going on, and then the next quarter it kind of made sense. Why he did that. Yeah. Interesting.
It was quite interesting, and it's amazing how many people are speculating on different aspects. To me, it looks so clearly like a tax loss harvest. I think that's all it is.
Yeah, we heard it here first. Matt, thanks so much for your time. We're about to run out of camera battery, and Hamish, thanks for
no worries. Thanks for having me.
riding along on this one. That was good fun. But Matt, great to chat with you in person this time. And,
in person,
hey, it's great to see you here. If you enjoyed that video, I'm sure you're going to love this next one we put together. We'll see you there.